Hello everyone. In this video, I'm going to cover the topic of central bank and banking system in India. In central bank, we will mostly study about how RBI was established and the organizational structure of RBI, the subsidiaries of RBI, and the parameters like what are the basic functions of RBI. It is I don't think there are many previous year questions from this chapter, so I will be just covering it a bit, like not in that much depth. So now RBI was actually the starting of RBI happened due to Hilton Young Commission's recommendation, and then they passed a bill. Hilton Young Commission passed a bill. It was passed in 1926, and then that bill was accepted in 1934, and then RBI was created in 1935, and then it became the India's central bank on 1st April 1935, and it no, it didn't become. Yeah, it was first India's private shareholders bank with paid up capital of INR 5 crores. After that, it seized the currency issuing system for Burma. Like it stopped issuing currency to Burma in 1942, and then it stopped acting as a banker of Burma also in 1947, and also stopped giving services to Pakistan in 1948, and then finally in 1949 it was nationalized by Government of India under Reserve Bank of India Act 1948. Now, earlier the central office was in Kolkata, then it was shifted to Mumbai. The first governor of RBI was Dr. Osborne Smith, and the first Indian governor was Sir C.D. Deshmukh. The organization structure of RBI has 12 levels. The highest is Central Board of Directors, then the governors, then comes the deputy governor, then comes executive governor, then comes principal chief general manager, then comes chief general manager, then comes general manager, then comes deputy general manager, then comes assistant general manager, then comes assistant manager, then comes the support staff. The Central Board of Directors has 21 members. Five are the official directors. uh, Five official directors are include one governor and four deputy governors. 16 are non-official directors. In that, 10 directors are from various fields, and two are government officials, and four directors are from each local board. The local boards are four boards in north, like in New Delhi, in south in Chennai, in east in Kolkata, and in west in Mumbai. Now, looking into the subsidiaries of RBI, there are five subsidiaries. One is like the first one is DICGC, Deposit Insurance and Credit Guarantee Corporation. This is the subsidiary which basically provides a kind of deposit insurance in case the bank falters to pay its money back to the people, and it gives up to insurance of up to 5 lakh per account holder, and it was formed in 1978. Earlier the limit was 1 lakh up till 2011, and after that it was increased to 5 lakh for after the recommendation of Damodaran committee, and that is all. Second is BRPN MPL, Bharatiya Reserve Bank Note Mudran Private Limited. This is the private company which was established in 1995 and which manages two presses to make notes for one in Mysore, Karnataka, and second in Salboni, West Bengal. Third is REBIT, Reserve Bank Information Technology Private Limited. This is for IT and cybersecurity cell. It was formed in 2016 in Navi Mumbai. Third is IFTAS, Indian Financial Technology and Allied Services. This basically they design IT related services in all banks and financial institutions. They also manage servicing of RTGS and NEFT since 2015. The last one is RBIH, Reserve Bank Innovation Hub. Uh, as everyone knows, it is for new innovative, to create new innovations. A it is kind of an initiative by RBI for new innovations in the field of finance, and it was set up under the Companies Act 2013, and its initial paid up contribution was of 100 crores. That is all. Now, next is what are the parameters to judge the health of an economy? First would be the GDP of the nation. Second would be the change in prices of the commodities. Third would be how many bank runs are happening in the state and also the state of the banking companies. And the last would be the level of foreign exchange reserves. That is all. Now, also, what is monetary policy? Monetary policy actually has a objective of price stability, or also it has many more objectives. But pursuant to the amendment of RBI Act 1934 in May 2016, the primary objective was to maintain price stability while keeping in mind the objective of growth. Also, there are many instruments for implementing monetary policy. Uh, Repo rate, reverse repo rate, marginal standing facility, li- liquidity adjustment facility, bank rate, cash reserve ratio, open market operations, and market stabilization scheme. That is all I think needed for monetary policy. I think we have to remember the instruments, which are repo rate, reverse repo rate, marginal standing facility, liquidity adjustment facility, bank rate, cash reserve ratio, open market operations, and market stabilization scheme. There are eight of them. Now, for the financial stability, there are six, I think, functions of RBI. First is board for financial creation of board for financial supervision and board for payment and settlement system. Uh, Second is Financial Stability and Development Council, uh, the formation and the function of this council. Third is RBI acts as a lender of last resort. Fourth is it also has a financial stability unit. Fifth is it measures and monitors the systematic risk. And the last is it also gives a financial stability report. Now, what is the difference between regulation and supervision? Regulation means like regulating or making the rules. Supervision means checking how much the rules have been followed and making others follow the rules. Also, regulation is static in nature. Supervision is dynamic and it is real time in nature. Regulation has a broader scope and supervision has a narrower focus. RBI is a regulatory body that regulates commercial banks and cooperative banks and NBFC. And now also the other roles of RBI, like the roles of RBI in general are issuing of notes, being the banker to the government, being the banker to other banks. Also, it is the monetary authority, it is the custodian of foreign reserves and financial inclusion and developmental role. All this. So this was it for the central bank.